Hey there, everyone! Welcome back to our channel. If you're passionate about real estate or just curious about how to buy your dream home, you're in the right place. Today, we're diving into a crucial yet often misunderstood concept in real estate: seller financing. Whether you're a first-time homebuyer or an experienced investor, understanding seller financing could open up new doors for you. But first, let me ask you this: have you ever thought about how you could buy a home without going through traditional banks? Sounds intriguing, right? Well, stick around as we unpack the ins and outs of seller financing. So, what exactly is seller financing? In simple terms, it's a transaction where the seller of a property provides financing to the buyer instead of a bank or mortgage lender. This means that the buyer makes monthly payments directly to the seller until the total purchase price is paid off. It's a win-win for both parties if done correctly. Now, let's break this down further. There are several key elements to consider when it comes to seller financing. First, we have the terms of the agreement. These can vary widely depending on the seller and the buyer's situation. Common terms include the interest rate, the length of the loan, and the payment schedule. For instance, a seller might offer a 5% interest rate for a 15-year term, which is quite favorable compared to traditional mortgage rates that can be much higher. Let's look at a quick example. Imagine you want to buy a home listed at $300,000, but you're not eligible for a traditional mortgage. If the seller agrees to finance the purchase with a 5% interest rate over 15 years, your monthly payment would be about $2,372. This could make home ownership possible for someone with less than perfect credit. Now, here's another critical aspect: the down payment. In many seller financing agreements, the seller might require a down payment, which is usually lower than what banks require. A seller might ask for 10% of the purchase price instead of the standard 20%. That brings our down payment to $30,000 instead of $60,000. This can significantly reduce the initial financial burden on the buyer. But what about the benefits for sellers? Well, there are several. Sellers can often sell their home faster because they're offering a unique financing option that not everyone has. Plus, they might be able to earn a higher price for the home since buyers are willing to pay a premium for the convenience of seller financing. Additionally, sellers can earn interest on the loan, which can be a steady stream of income over time. Now, let's talk about some potential risks and challenges. Both buyers and sellers need to be cautious. For buyers, if they miss payments, they risk losing the home, and for sellers, they could end up with a buyer who defaults. It's crucial to do your due diligence. Sellers should check the buyer's creditworthiness, and buyers should ensure they understand the terms clearly before signing anything. And speaking of understanding terms, it's always a good idea to have a real estate attorney review the financing agreement. They can help both parties navigate the legalities and ensure that everything is fair and transparent. Let's take a moment to discuss who seller financing is best for. Typically, it suits buyers who may struggle to secure a loan through traditional means, like self-employed individuals, those with less than stellar credit, or even investors looking for rental properties. On the other side, it's appealing to sellers who want to close quickly, generate income, or benefit from tax advantages by receiving payments over time. So, to wrap things up, seller financing can be an incredible alternative to traditional mortgage options, offering benefits to both buyers and sellers. By understanding the terms, risks, and advantages, you can make a more informed decision when it comes to real estate transactions. If you found this video helpful, don't forget to give us a thumbs up and subscribe for more real estate insights. And if you have any questions or experiences with seller financing, drop them in the comments below. We'd love to hear from you. Until next time, happy house hunting!